Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bowling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello, Ginny Bowling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments. And today we have Lauren Brychell with us. Lauren, thank you for coming on.
Thank you for having me, Jenny.
I meant to ask you, is that a natural background or is that I shouldn't ask you this, but is it?
It is natural, yes.
It looks it. That's awesome, really, yes.
Yeah.
And you're in Denver, Colorado, right?
Denver, Colorado, yes.
Yeah, nice. Is that the city behind you?
It's not, it's actually, today I'm in Breckenridge, so it's not this, it's the mountains. Yep.
Nice. Okay. All right. Well, and so you own the company Equity Elevated Consulting, correct?
That is correct.
You've had lots of different experiences. We talked a little before the show. I want you to go ahead and tell the people what you've experienced. You've first and foremost been in marketing, though, I'll say, and so you're on the show today to be able to help people understand how we operators often have marketing programs that reach here, there, and the other place, and just talk a little about how you figure out what is the best way to try to reach people and wake them up about what opportunities are there for them to invest in.
Yes, so as we just talked about, I have a marketing background, which when I got into this commercial real estate capital raising space about 7 years ago now, it brought a fresh set of eyes, something I knew absolutely nothing about, which was really fun and challenging. And I had a great mentor to walk me all through it. So through that role, I was able to raise about $75 million myself, take my marketing skills and now capital raising skills and helping find new investor leads, nurturing them, building great relationships. Took all those skills into Equity Elevated Consulting. And now I help general partners and fund managers all over the country with every kind of asset class you can imagine, raise more capital for their deals, market properly to the specific investor avatar or personnel that they're looking to target, and act as fractional investor relations for them as well if they're shorthanded on their team.
That's terrific. That really is. And so yeah, we all have our different audiences, so to speak, our investors and whatnot. And so just to help fill in what mine is, what I was explaining to you is I have on the one hand all those eminent domain professionals that are used to looking at valuation. They can go in a courtroom and argue what the value is, or land planning, or all of that, negotiators and relocation people, all that are so used to working, they never think about investing for themselves. So it's all Greek to them when they start watching these shows. It's like, you sure? How do you do this? And why? And yeah. And then I have the other side, which are the pickleball and tennis players that are more about quality of life. And they're more used to just invest passively because they know that, you want the money working for you while you're busy doing other things. It seems like that they are more attuned to that. So you have to get to know all types of investors then, right? So
Yes.
what do you do when you have a client call to say, I'd like to talk to you about coming to work for us?
Yeah. So usually a client comes to me and says, hey, I've got this problem, or I've got this new deal I need to launch and I need help with, or I've never raised external capital before outside of maybe some friends and family or small raises, and I'm looking to grow and scale. And I have absolutely no idea how to do that. or I just need an extra, like I said, set of hands on getting all of this done in the time frame. Because a lot of times you'll find firms before they hit 100 million assets under management or more, they've got a smaller team, they're pretty lean, which is great. But as they start to grow and they have 50 investors and then 100 investors, it becomes almost a full-time job to handle the capital side of the business while they're also trying to acquire new properties and manage all the ones they have in their portfolio and manage the team and the company and everything else. And so they come to me with one of those categories of needs or issues to solve for them. And that's when I jump in and we look at everything together. We do a deep dive of what they currently have, what they need, what their budget is, what their timeline is. And then we look to solve either those marketing or capital shortage needs or whatever it is that they're looking for. And so what I love most about it is that it's always changing. It's always fun. And it's never the same. There is no one size fits all, which keeps my day-to-day very fun.
So how much do you need to actually get to know about the property or the project? We're going to talk about that.
A good amount. So, the project and the properties are very important, but honestly, what's even more important than that is figuring out who they're trying to target for their ideal investors. And we call those avatars, trying to put one or two different kind of personalities around the type of people they're trying to target, so we can use the right messaging terms to find more of them, so we can make sure we're talking to the problems or solutions of what these investors are looking for. For example, if we are targeting the avatar of a retired professional who has money in their bank accounts, they want to go and live a lifestyle business, maybe they're a little less interested in risk, so they might be a great fit for a debt fund. So we look at the project and the type of time frame and maybe the market and the type of risk profile that project is, and then we try to find investors that are going to be looking for that type of thing. And so putting those two pieces together is really where the puzzle comes together.
Well, now you have to explain what a debt fund is.
Absolutely. Debt funds are great. It's like you're acting as the bank, you're acting as the lender, the private lender on a property. You don't necessarily have ownership in it like you would on the equity side, but you're bringing in monthly or quarterly interest like you would if you were any other lender, like I said, like the bank. And so it's a great option for those who maybe want a shorter term on a project. Usually they're collateralized against the property, so potentially a little bit less risky, and you know exactly the amount of interest you'll be earning, so it's consistent cash flow coming in, which is a really great option if you're looking for something a little bit more steady.
Right, exactly. Very good. So talk about some of the different projects, especially those unusual projects you've gotten involved with.
Yes, I've been able to work on some very cool projects. One recently was the release of the James Bond video game, the newest version. So that was really fun. That was a very exclusive, only a couple $1 million raise, and filled up very fast just because of the type of project it was. That was fun. Got to work on some really cool development projects, skyscrapers in downtown metropolitan areas, retail conversions in different secondary and tertiary markets. Lots of interesting oil and gas opportunities, which a lot of people love because you can usually take those tax benefits off of your active W-2 income. So that's a great option for high income professionals who are still in the work field. And then, of course, as I'm sure you've seen out there in the market, lots of interesting multifamily opportunities now that might have gone bankrupt with the last owner, might have a really interesting assumable rate that was lower and fixed from before interest rates skyrocketed. So lots of interesting things out there and lots of capital still on the sidelines.
So, and how do you look at the market cycle right now? Where do you feel like we're at right now?
It's a great question. Gosh, and it almost feels like we're in a different cycle just depending on the asset class, right? When
Good
we're
answer.
looking at yeah, and it's so funny because it's some, deals are filling up so fast with investors. Some are a little bit slower because investors are still a little cautious, excuse me, around those. So I would say, the traditional asset classes in the alternative space, like the multifamily, the self-storage, maybe some retail, office, things like that, they're slowly but surely gaining some more interest after maybe slowing a little down a little bit over the last couple of years, which is great to see. But a lot of these like super alternatives, as I'll call them, like the oil and gas and the other interesting deals, are just skyrocketing, in my opinion. And of course, not at the top price wise, but just in interest and the interest level side of things. So I don't know. It's going to be really interesting to see what happens next year as well.
It is, it is. And especially with the new legislation, I think, where President Trump has made it possible for employers to give more options to the employees.
Yep.
I initially, when I learned about all this and how you can use retirement money to invest in real estate if you just move it to a different type account, I was like, oh my gosh, everybody should do this. And I still feel like everybody should know about it. But there are some people, obviously, that just really don't understand risk and that kind of thing, because there's, all kinds of people, right? And
Right.
some people just won't research that stuff. It's not a great thing for them, but people that will take their time that will even research a stock, right? It's the same idea. You research the sponsor, the property, and the market, and yeah, it's a beautiful thing.
Absolutely. It really is.
So, do you craft the whole budget or well, you probably fit wherever they want you to fit, I imagine, right? Or do they
I
tell you to just take it away and do the marketing program?
It just depends. Sometimes I just fill in gaps where needed. Sometimes I come up with an entire year worth of marketing strategy and budgets and different ways to fill the top of the funnel for different categories of investor leads. In an ideal world, it's, hey, we need an entire marketing strategy for next year. We have a budget of X number of dollars. Please, propose how you would allocate that across the board. And when you're looking at top of funnels for investors, there's a lot of different ways. You could go on one end where it's a lot lower cost for referrals from existing investors, or going to local real estate meetups in your area, to going to conferences more nationwide, to doing Facebook and LinkedIn ads online, which is a lot more expensive, to posting publications and going on podcasts and all sorts of different things that have different conversion rates, different budgets attached for optimization. And so it's fun kind of building out that puzzle piece. Once we figure out who they're targeting, now let's see where can we find more of them that fits within your ideal marketing budget. So it's pretty fun. Yeah.
And would you say most of your experience is in self-storage?
I would say yes. Technically, most of my experience is self-storage. Probably about 5 or 6 years of experience there, and 2-ish years with everything else.
Right. So, if you're looking for the typical self-storage investor, can you give us a sample of what that typical investor looks like or how you would craft that between all the
Sure.
different types of media?
Absolutely. So I would say there's, a couple different types. One could be your high earning W-2 professional that just wants to diversify into something else. They've seen the education and the marketing over the last couple of years that self-storage is a great asset class that can be recession resistant, no tenants, no toilets, all of that kind of stuff. So that's interesting to them, right? Maybe they've had a single family rental. Actually, that'll be my second avatar. So it's interesting to them to diversify into something that maybe they use, they're familiar with. They go and put their stuff in their storage unit and think, gosh, this thing must be making a ton of money. Look how much I pay per month, right? And they just keep
Sure.
raising the rent on me. So that's one type. Another type, which is more probably familiar for the self-storage or the multifamily space, is people who have owned their own portfolio of single family rentals or small multifamily rentals. They've been the active operator on that. They say, no more. I'm tired of getting calls in the middle of the night. I don't want to deal with tenants and toilets. Self-storage seems awesome. They don't have any of that to deal with. So that's another bucket where they'll sell all of their active rentals off. They'll throw the money into a passive deal in the storage or maybe multifamily space. And then a third one would be, generally self-storage brings in some lower risk investors, just because it seems to be a little bit more steady. There's not any crazy, well, there are with the REITs, but no crazy like downtown high rises and multi-story buildings and things, for the most part, on the middle market side. So people who are looking to retire and they're looking for more consistent cash flow, or maybe they already are retired, are a pretty good fit for that as well.
And so then you're looking at a lot of LinkedIn and Facebook type outreach, are you? Or is it more live events, or what do you see there?
It's a mix. Honestly, it's a total mix. I recommend doing more than just one marketing channel. So for example, if you think about those 3 types of storage investors I just mentioned, storage investor one, the W-2 professional, would probably be on both Facebook and LinkedIn. But your retired professional probably won't be on LinkedIn. And they might, read specific publications like Yahoo Finance, right? Or New York Times or something like that, where you could throw in an article and do a paid media piece there. Someone who might be in that active investor turned passive could be really any demographic. They could be younger, they could be middle-aged, they could be a little bit older. And so kind of honing in exactly who your investors are by doing a deep dive on your database and all the demographics that are tied into that will help decide where those might be, where you can find more of those, and how to best market to them.
Right. Yeah. Yeah. There's so many different approaches. And as far as when you start looking to do paid ads, what's your philosophy? Is there a minimum or don't bother kind of thing?
I would say that if you're not looking to spend at least a couple $1,000s a month, probably not worth it, because obviously Meta ads, for example, the Facebook and Instagram platforms really favor the people who spend more money, and they will throw you into the better algorithms, for lack of a better term there, and thanking you for spending more money. And so I would say 2,000 to 3,000 minimum is probably the bare minimum. Otherwise, you shouldn't waste your time. LinkedIn can be pretty expensive for ads. Probably double that to get any sort of traction from them. So unless you've got a really large budget, I usually recommend not even going there. But if you've got, say $5,000 a month for your marketing budget, again, depending on who you're trying to target, usually more often than not, I'm recommending to hit as many in-person events as you possibly can, because while you'll have less of a quantity of leads, you'll have higher quality leads. Likely when you're meeting people face to face, that conversion rate is so much more powerful, higher, and usually just a lot more effective across the board.
Yeah, that makes sense. And then as far as the number of people you're trying to reach in a live event, are you talking like buying dinners or doing lunches and presentations at the lunch and dinner?
It really could range from going to a city where you have a couple of active investors, having them bring a friend who could be a good referral for you, to doing some small scale advertisements and Eventbrite postings in that specific city or area you're looking to host, see who shows up for a lunch or a dinner, maybe do a little investor presentation, or going to a conference or event that's already existing and bringing a lot of people in that space to the area, and either hosting, maybe a separate happy hour outside of that event for anyone who you meet that day, or a dinner with maybe some folks you met and some other people in the area to try to bring more people together. So lots of different strategies, again, depending on the budget and how many people you think can be attending and everything else.
Right. So if someone's doing the YouTube channel approach too, do you get involved in those at all?
Yes and no. I recommend, if you're going to be doing video content anywhere else on socials or on your website or anything, also add that to LinkedIn, or excuse me, YouTube. Why not? It's free, it's fast, it doesn't hurt. It only helps SEO and everything else. So while I don't spend a ton of time on YouTube and putting ad dollars behind YouTube specifically, I think adding content there like you would add everywhere else makes a ton of sense.
So one question that just actually came up today, and you're the perfect person to ask this then too. I had heard that some people are uploading their YouTube, like our interview now, to the whole interview to LinkedIn. Is that correct? Is that what's happening out there?
Absolutely. Yep. LinkedIn or even Facebook, or Facebook Live events. Sometimes they'll stream it live, which
Oh,
I think is
yeah.
always great. Yeah. Anywhere that you can throw it is awesome. And of course, as people look at it and they view it, then you get boosted up into the feed, and everybody loves that.
Well, I have never come across one in LinkedIn. Do you actually post it somewhere else, or is it in the regular postings with the thumbnail? It's just then when you open it, it's the whole thing.
Yep. You can post a thumbnail and link the whole video to it, and it opens up, or you can even stream it live through LinkedIn. And people will get notified that, hey, Ginny's live on LinkedIn, come check it out. So it's kind of an interesting strategy as well.
I'm a little chicken to do that. I don't know why,
Right.
because all I do is just talk, but anyway.
Yeah.
Yeah. So, well, first, what is your big takeaway for people to know about what you do?
Absolutely. I think, a big takeaway and something that I talk through and help coach people through all the time is that, you know, capital raising is just another part of the business that anybody can learn. A lot of people are a little bit scared to start that off the bat, right? They think, gosh, it's a little bit of that imposter syndrome, right? Well, gosh, why would people want to invest in my deals? Or I don't have enough of a track record, or whatever that, self-limiting belief might be. That everyone had to start somewhere, right? You probably have great deals and you're probably a really great operator. So just go out there and try it. And then it's really a mindset shift when you're looking to start raising capital, because it seems scary. You think, gosh, I don't want to go ask my friends and family for money. It's switching that from that mindset to, hey, I'm presenting an opportunity to the people who are closest to me to invest in something they might not have had access to before. And so I think that's one big takeaway that I want people to have is, whether you're investing passively or you're working a W-2 job and you think, gosh, I would like to add some more revenue or build my net worth through a couple of real estate deals, but I don't have any money or don't have enough money. Raising outside capital is a great option, and it seems extremely scary. And, it's not easy. I'm not saying it's easy, but it's totally doable. And takeaway, the biggest one would just be to change your mindset shift and know that everyone had to start somewhere with it.
Okay, so I wrote it a little funny. Change your mindset shift. Say that last part again. Change your mindset.
Yeah, and just, everyone had to start somewhere with it. So don't let that lack of experience or time or whatever it is scare you.
And just start kind of really, right?
Yeah.
What you were saying before that I was summarizing as the takeaway is syndicators aren't asking for money, they're giving an opportunity.
Yeah.
And change your mindset and just start. So your actual takeaway is get your mindset right, really, right?
Mm-hmm.
Yeah,
so I guess there's a couple things in there, but they all kind of tie together.
Yeah, they do. They do. But we want to get a clip of you saying it exactly how you want it on the clip. So take a moment.
Okay. All right. So I guess my biggest takeaway would be to shift your mindset from the thought that you're asking for capital to presenting an opportunity that people might not have access to elsewhere. And that's going to really help shape the future of your capital raising journey.
So true. Absolutely. Yeah. That was a big part of what I had to realize. And it's true, because especially with 506Bs, you have to be friends or family to know about it.
Right.
So yeah, awesome. Awesome. Okay. So anything else that we didn't touch on that you want to be sure that gets recorded here about either special skills you have, special things people ought to know about retaining? You touched on fractional, but a lot of people don't know what
Mm-hmm.
fractional is. Make sure you hit that before we ask you that last question.
Okay, perfect. So something I'd love everybody to know is that whether you're starting with a very small marketing budget because you're just getting started, or you have $50,000 a month to spend on ads, there is a technique and a top of marketing funnel for everyone, no matter where you're at in your journey. There are lots of creative ways to market for free or low cost to find great, strong investor leads and partners. And of course, if you've got a big budget and a big team to call a lot of leads that come in, there's a spot for you too. So happy to help with any sort of project. There's nothing too big, nothing too small. Happy to provide advice as you need it.
And so that probably means, I'm guessing, that you know a lot of different CRM systems so that you can be adaptable. And or do you end up oftentimes finding they need a CRM and you need to set it up for them?
Yeah, so a lot of times folks do need a CRM. It's something they don't necessarily think about right off the bat. I actually wrote a book recently called Beyond the Lead that talks a lot about this. You don't need more leads. Usually you just need a better system and to start building that nice foundation first to be able to capture these leads properly, nurture them well so that they actually convert into investors, don't fall through the cracks and go cold immediately. So I do have a lot of great suggestions for CRMs. I do have a favorite, of course, which is HubSpot, but I work in a lot of different ones across the board. And I would say if you're looking to start raising capital, just go ahead and spend a couple hours building out that CRM, and your future self will thank you.
So true, so true, absolutely. Very good. All right. So, like I ask everybody, is there a pivotal person or event that has brought you either to where you are now or that you're trying to get to?
Absolutely. Yes, the one that comes to mind, which came immediately when you asked me the question, is Keith Blackberg. He runs the Financial Journey Mastermind. And I went to that mastermind that a couple of investor friends invited me to a couple of years ago. And one of the first sessions that I recall watching was one on buying existing businesses. And I was very familiar with the commercial real estate space. And this was kind of before buying businesses really blew up in the mainstream media and everybody started talking about it. But that really just changed my entire perspective and outlook on the possibilities of building wealth. And I think I was probably 25, 26 years old at the time. So I was so lucky to be in that room when I was so young. And that really just shaped the trajectory of my future. And now I'm about to acquire my third business. I've got two that I started, but it's very exciting. And I'm finally about to make that dream come true from hearing that for the first time in Keith's mastermind.
So you have two businesses you started, plus a third that you just started too, I think you said, right?
One that I'm looking acquiring. Yep, it's already existing.
Okay, I was getting to that. So where's that acquisition coming in? Yeah.
Yep, that acquisition's
Okay.
hopefully coming by the end of the year.
Good, good. And so Keith, what was the name of his company?
Financial Journey.
Journey. And is he still around? Are you still in touch with him?
Absolutely. I just saw him in Dallas about 2 weeks ago.
Okay, so we'll talk. You'll need to say if you want to reach out to him or if I should just say that you nominated him. Because as I always say, if they come on the show and prove they're a pivotal person, obviously then they get promoted and then they'll get a lapel pin that says they're a pivotal person and we keep them on the list of pivotal people. So that makes it accessible for other people in the future too. They're in my newsletter and that kind of thing. So yeah, super. So, okay, why don't you tell people how to reach you?
Absolutely. You can reach me at Lauren Brychell on LinkedIn. Brychell is my last name. And then my company, Equity Elevated Consulting, is there as well.
Very good. And your book again is called
It
Beyond
is.
the Lead, right?
Yes, correct.
And do they have that at Amazon or where are you selling it?
Yep, Amazon. You can find that on Amazon. If you type that in, it can be paperback, hard copy, or Kindle.
All right. We'll have that in the show notes and very good. So thank you so much for coming on and letting us look behind the curtain and how to do some marketing for finding people to offer those deals to, because like you said, a lot of times people aren't so good about approaching people.
Absolutely. Well, thank you so much for having me.
Great. Well, thank you.